Good morning. My name is Jatin, and I'm a technical staff member with the IFRS Foundation. And I'll just be talking you through a bit about developing the IFRS Accounting Taxonomy. So today I'll just, in the session, chat to you about sort of the overview of the taxonomy due process. How do developments to the taxonomy arise? What is the process that we go through? I'll speak a bit of our approach to modeling, which may address some of the questions or hopefully start a conversation into some of those questions. And then provide a few examples of specific modeling considerations and how we think through those and how we weigh up the costs and benefits of those modeling approaches. And then I'll chat to you a bit about how you can access the IFRS Accounting Taxonomy on our website and the related resources, some of which hopefully will help the navigability of the taxonomy, as well as understanding the updates and things like that. And then towards the end of my session, I'll just chat to you about our work plans, our current work plan, what we're working on at the moment, possible future projects, and then very importantly, how you can get involved in the development of the IFRS Accounting Taxonomy. So to speak a bit about the due process, first and foremost, there are broadly two types of changes that could happen to the IFRS Accounting Taxonomy. One of those changes is changes to the taxonomy content, which arise from new or amended IFRS accounting standards. And in those cases, when we propose changes to the IFRS Accounting Taxonomy, those changes are approved by the IASB. There is a process whereby it is sent out for public consultation, where stakeholders can provide feedback, after which that feedback is considered and a final update to the annual taxonomy is released. The second type of change is changes to the accounting taxonomy that are not necessarily aligned to IFRS accounting standards or come from IFRS accounting standards, but rather from common reporting practice, where we conduct sort of an empirical analysis on a sample of reporting entities. We identify any commonly reported concepts which may be extensions, and then we determine if these are consistent with the requirements of IFRS accounting standards. And if they are, we try and build those elements into our taxonomy with a view to hopefully create a bit more comparability and reduce the need for preparers to use extensions to communicate the information in their financial reports. So the common practice and general improvements updates, they're slightly different to the amendments to new or amended accounting standards, in that they are not approved by the IASB, but rather they are reviewed by the IFRS Taxonomy Review Panel. In some cases, members of the IFRS Taxonomy Review Panel can defer to the IASB to just ask them for their opinion on certain matters, but it's not required to be approved by the IASB. Those updates are also subject to public consultation, usually for a period of between 60 days, 90 days, sometimes 30 days, depending on the scope of those updates. And a final update is then incorporated into the annual taxonomy. For both changes or updates to the annual taxonomy, we involve the IFRS Taxonomy Consultative Group, the ITCG, and the ITCG's role is often to provide feedback and advice to the team. This is during the creation of the updates, as well as reviewing the proposed taxonomy files and related materials before they're published for public comment. So as my colleague David mentioned earlier, the IFRS Foundation's vision for digital financial reporting is to create decision-useful, high-quality, globally comparable, and accessible digital financial reports. And the IFRS Accounting Taxonomy represents a key tool in facilitating this vision. When we prepare or update the IFRS Accounting Taxonomy, we try to adopt a certain modeling approach. And at the foundation of that modeling approach, first and foremost, is to reflect the presentation and disclosure requirements in new or amended IFRS accounting standards as they are. And often this process involves speaking to the standard setting teams, as Dave alluded to as well, understanding what those disclosure requirements are, understanding what the disclosure objective is, and how that links and relates to detailed disclosure requirements. Similarly, with common reporting practice, while this may not be required by IFRS accounting standards, the common reporting practice that we do propose needs to be consistent with the requirements in IFRS accounting standards. So that almost represents the baseline or the foundation of our modeling approach. Within that, then, we need to find a way to balance the needs of both preparers and users. And often we find that there's more than one way to model a certain disclosure requirement or a certain presentation requirement. But within that, it's about looking at, well, how can we develop the most robust data modeling approach while also taking into account the considerations of complexity to prepare digital financial reports? How accessible or navigable is the taxonomy? How easy is it to then extract and use that digital financial information? So often there is a trade-off working within sort of optimal solutions within a constrained environment to determine what then is the best modeling approach. And then what sort of bounds that entire approach is what we are constrained by, which is often things like the technology specification with which we are working with, for example, XBRL, and the IFRS Accounting Taxonomy architecture. So that's sort of what we are constrained by when we are determining our modeling approaches. What I will try and do in the next few slides is just select a few examples of modeling considerations and how we've considered this trade-off in coming to proposals, or what we are still considering at the moment. So the first one is the potential use of dimensions on the face of the primary financial statements. So there were many instances where this sort of issue cropped up, but the one was in our common practice review of financial instruments, where we conducted a common practice review on banking entities and specifically that obviously present and disclose financial instruments. So what we observed is that banking institutions often disaggregated financial assets and liabilities by various characteristics. So this could be by the class of that financial instrument. So what is it? What is the nature of the instrument? Either by the category of that financial instrument. So how has the financial instrument been classified? How is it measured? And sometimes also by counterparty. So who's the other party to this instrument? And they've shown this disaggregation in the statement of financial position. So often disaggregations can more easily be represented by dimensions. And what we noticed is that elements in the IFRS accounting taxonomy do not fully capture the information that preparers are communicating. And the consequence of this is that they would often create extensions or their own concepts to reflect this information. So I've got an example of what a preparer may present on their balance sheet. They may disaggregate financial assets at fair value through profit or loss by various classes, or we often notice the other way around where they had loans and advances as a class of financial asset and then disaggregated by category thereafter. So in considering this balanced approach or this trade-off approach, we considered, well, how could we model this type of presentation? One approach is to use line item modeling, which is then obviously to compare what are the commonly reported combinations of permutations and say, well, loans and advances at amortized cost is commonly reported, and so we create one concept for that. And then we do similar things for financial assets at fair value through profit or loss, and so on and so forth. The other approach is to look at the presentation dimensionally and say, well, actually, you have commonly reported classes of financial assets, commonly reported categories of financial assets, and entities can then use whatever combination makes sense to them to tag the presentation of financial assets. So that was one of the considerations, and both have their merits, which I'll try to demonstrate for you on the next slide. So, as I mentioned earlier, there is this balancing approach, and I'd just like to caveat that this is not all of the considerations that we considered, but just some of the key ones that we had thought about. For example, if we're looking at line item modeling, line item elements are often easier to tag, and and often easier to conceptualize because all of the information you need to understand is in a single concept. The information is there and you can sort of glean that information. However, when you notice commonly reported permutations, what ends up happening is that you could have a taxonomy that has a seemingly lot of repetitive elements, resulting in a larger taxonomy which can be difficult to navigate, and often may end up with preparers choosing the wrong element erroneously, or realizing that they don't have the right element and creating an extension anyways, which is something we don't want to have happen. Conversely, if you look at dimensional reporting, it may result in fewer elements and may be more sort of aligned with what they would present in the note disclosures. However, this dimensional modeling doesn't allow you to create calculation relationships that extend across multiple dimensions. And so what you find in the statement of financial position, which is a key primary financial statement, you've got calculation relationships which don't pull across the entire statement of financial position. So these are some of the considerations that we think, well, what benefits preparers, what benefits users, and how can we strike that balance? A second sort of consideration or opportunity we considered in the IFRS Accounting Taxonomy and are considering is the possible use of what we call categorical elements. So, for example, there are certain narrative disclosures that are intended to be directly comparable between entities and over time. And often these types of narrative disclosures are prepared in a categorical format. So either the fact that something is the case or a choice that comes from a predetermined list of choices, for example, your depreciation method. And there are two types of elements that we are considering introducing into the IFRS Accounting Taxonomy. Those are Boolean elements, which allow an entity to choose true or false for a particular element, or extensible enumerations, which allow an entity to choose an answer from a predefined list, and in the case of it being an extensible enumeration, to also then create an entity-specific choice added to that list and then apply that to the digital financial reports. Again, in coming to this sort of decision, there are considerations to take into account. And again, these are not all the considerations, but just some highlighting that balanced approach. Ultimately, the introduction of categorical elements would help users of financial statements because it allows you at a high level to pinpoint specific disclosure points, data points that you may find useful, drill down into that narrative disclosures, and then go into more detail looking at the sort of narrative disclosures. Some of the approaches we considered is, well, if we just use narrative text elements only, that's one approach. We could entirely replace the narrative elements with categorical elements, or we could use a combination of narrative and categorical elements, which would require preparers to tag the narrative of that piece of information, as well as an additional categorical element. And this last third approach may have additional effort for preparers to sort of double tag this piece of information, but then there are extreme benefits for the users because, as we know, especially in accounting disclosures, there's very rarely a categorical yes or no answer to a question. There's often gray area. There's often some sort of judgment that's applied. And so this third approach would allow preparers to say yes or no, and then further qualify that with whatever they need to in the narrative disclosures, which would benefit users. So those are a few of the examples that are of the considerations, and I'll be very happy to chat to any of you about further considerations if you have anything on your mind later on. I just wanted to chat to you a bit about how you can access the IFRS Accounting Taxonomy. So I have created a link if you have access to the presentation. I'm not sure if you do. Otherwise, I'll be happy to show you how to access the taxonomy. This is our landing page on the IFRS Foundation website. And what we have, various tabs on this website, is access to the annual taxonomies, access to what we call IFRS Taxonomy Illustrated, which is two variations of how you can view the taxonomy in a human readable format. One is a PDF version, one is an Excel version. The Excel version has a bit more information, documentation labels, a bit more detail, whereas the PDF version is often a very quick way to sort of view a hierarchical presentation structure and view the elements. We also show versioning reports, changes from one year to the next, and various guides on how to understand our taxonomy updates, understand our guide to common practice, etc. What I think is very useful on the IFRS Foundation's website is the IFRS Standards Navigator. So this tool is really useful because first and foremost, it shows the presentation and disclosure requirements in IFRS standards. It shows the entire standard. But what's really nice is there's a toggle button where you can toggle on the taxonomy overlay. And what that does is it links any presentation and disclosure requirement in the standard with the related taxonomy element under that. And I think this is quite a useful tool for both preparers and users, because often if you feel you might be missing the context of what an element relates to, the Standards Navigator is a really useful tool to then link that to the disclosure requirement, and you get more clarity on what exactly this element relates to. So just to chat to you about a bit about our work plan. So at the moment, we're in the second half of 2023. We are working on two proposed taxonomy updates at the moment. The amendments to IS 7, IS 12, and IS 21, that was recently published for public consultation. And this is just a request from us to please access that document. Please send in your comments because it's valuable to our taxonomy development process. There's another update which will be coming out fairly soon, which is looking at financial instruments, the common practice review on financial instruments, as well as some general improvements. And then looking forward in our current work plan, we've got a big project on primary financial statements in the pipeline, as well as subsidiaries without public accountability, and continuing our common practice review going forward. Looking at some future possible topics. So where there are new standards or amendments coming out, then those obviously will form part of our future work plan. Whereas as it relates to the common practice review, these are possible topics we could explore. And again, if there's any common practice or any areas where you find that there's an excessive amount of extensions which we could have a look at, we're always willing to listen. So please have a chat to us and let us know what those could be. But just having a look at standards where the next step is the publication of the standard, that would be rate regulated activities, which I think is intended to replace IFRS 14. There's also a few standards development projects where the next step is an exposure draft, which might require a little less interaction from the taxonomy team at this point, but there will be that sort of continued engagement with standard setting teams as they progress through the exposure draft. So that would be our FICE project, Financial Instruments with Characteristics of Equity, looking at BCDGI, DRM, and the improvements to the equity method. One of the big future areas for common practice review would coincide with the post-implementation review of IFRS 15, revenue from contract with customers. So where we can then build in improvements to the taxonomy to reflect that is sort of where we would get involved. And the most important slide, I think, is how you can get involved, because ultimately this process doesn't work if we don't have valuable stakeholder feedback. So the first sort of block I'd like to draw your attention to is just where you can find the projects that are currently open for comment. The link is on the slide, but again, I'm happy to show you where you can access this. And in most cases, you'd be able to submit your comments via a comment letter, and in some cases via a survey. We're trying to incorporate the use of surveys more regularly into our feedback, because that might be a sort of an easier medium to go through. And then if you'd like to sign up to receive alerts on the IFRS Accounting Taxonomy, you can create an account for free, an IFRS Foundation account. Once you sign up, you can go to your dashboard and then just sort of toggle on the accounting electronic reporting in the accounting category and get those alerts whenever we publish a proposed update or receive feedback and then publish that feedback, etc. So thank you very much. I have some time for questions.
You have 10 minutes for questions. Does anyone have questions? I'm sure this audience does. Right.
Hi, Jatin. So thank you for the presentation. And when you highlighted the balance that you have to choose between users and preparers sometimes, I think the fact that you highlight the fact that some choices have to be made sometimes also should highlight possible improvements in the technology. So for instance, right, I think from a textual point of view, you could say it would be easy to design a way for users, for preparers to declare that they want users to get the text as well as a category for the information. But right now, the technology does not allow that, right? So you have to actually make preparers create two tags. But do you also engage with the standard setter for the technology itself, right? XBRL International, to sometimes have them improve the technology? I think in this case, that would be something that would be very useful for all kinds of standard setters and all kinds of taxonomy creators. So it would be interesting also to know whether you also sometimes consider that the technology could be improved and make that feedback to XBRL International.
Absolutely. Thanks very much for that question, Mark. So I think you've highlighted a very important point there. Often, sorry about that. It's a multiple stakeholder feedback approach, right? So it would be us as the developers of the IFRS Accounting Taxonomy. We need preparer feedback, user feedback, but also on the technology side, speaking to XBRL, understanding firstly what potential improvements are there in the pipeline, and then also feeding back what potential improvements we think would be useful. And I'll highlight one example, which I stand to be corrected. I don't think it's close to being resolved. But for example, if calculation relationships can cross dimensions and still hold, that opens up an entirely new world of possibilities in the data modeling approach. So these are really important conversations to be having with XBRL International standard setters in terms of technology perspective. And I think we do continue to have those conversations.
Just a question on the common practice elements. They are lacking reference to the standards.
Thank you. I do take your point. Often when we create common practice elements, these are those that are not required by the standards, but are nonetheless consistent to the standards, or rather consistent with the standards. And often what we try and do is we either link that common reporting practice element to the closest requirement that would make it make sense. I can give you one example. If we were looking at the disclosure of financial instruments, for example, and there is a disclosure requirement, IFRS 7 paragraph 8a, for example, that says you need to disclose something on financial assets, but there's a common practice element that is closely aligned to that. We would ascribe the same reference. In absence of that, we often default to references in IS 1, which allow you then to say, well, you could disclose additional information that may be useful. In a way, those references are helpful links to the standard. And if there's a better way to create those references, then I'd be willing to listen to.
Yes, mass text blocks, yet you should tag multiple times a note with everything that is common practice elements, and
Right.
there is no reference to any standard. So to tag multiple times a note, if you don't have reference to the standard, you can select whatever you want.
Thank you. Common practice elements should have some sort of reference, even if that reference is to just the disclosure of additional information which may be useful to users. And that would be preparer's judgment in determining, well, which text blocks would I use to sort of communicate this information.
Thank you for the presentation. My question is about the consultation period. How are you doing that? And if when you planned the period of consultation, if you look also at the period where the high season from reporting is, because sometimes we experience that there is a consultation period, but it's the same time as we need to support clients with the report from the season. So sometimes it's difficult to participate on that and to take time to look and give some comments. And then when we do, we have the feeling that nothing happens, to be honest.
Thank you for that question. So to answer the first part of your question, the consultation period is usually 60 days. In some cases, if we determine the update to be really big and really impactful, we might make that longer. And in some cases, when it's a really small amendment, we make it shorter. So, but the norm is 60 days. You raise a very interesting comment about sort of where does that comment period overlap with reporting sort of deadlines, and I'd really be interested to have a conversation to determine where those busy periods are for you. But it's also about trying to find a balance between all timelines in a sense. So we have our own deadline, which is to publish annual taxonomies in March, and that almost requires us to work backwards to say, well, okay, how much of time do we have and where can we fit this in? If we can find a solution, and I think that would be ideal, because as I said, we value feedback, and I'd be willing to chat to you on that. And then I guess on your last point, we don't often publish responses to feedback because there's sometimes quite a bit, but that feedback is sort of taken into account. We summarize the feedback. We speak to either the ISB members if it's appropriate, or we speak to ITCG members if it's appropriate. And using those media, we try and sort of come to resolutions on what we think the appropriate approach should be. But rest assured that feedback is definitely taken into account and definitely taken on board to develop the tax. Correct. ITCG sessions and ISB meetings are public as well. You're welcome to watch them.
Do we have any other question? Time for another one? I have a question.
Yeah.
Who do you get your most comments from? Which region?
Oh, I haven't. I couldn't tell you.
Okay.
But I could tell you that we do value feedback from as many people as possible. So,
All right. Thank you very much,
Thank
Jatin,
you.
and we'll move on to the next session.